Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Nikkei is also seeing a fall. It's down 0.1%. Shanghai is managing to hold on to some bit of a muted gain.
So the levels, Nifty, lower bound support is 24,473.
Actual rules now, which came yesterday, say that you don't have to set aside 5%, you set aside 1%.
Thing on the Nifty, 24,814, almost unchanged.
We want this company to perform consistently.
At the moment, we are handling almost 60% of our cargo through the private operators.
Markets are happy. It's Friday as well. So yes, good move coming in for the mid and small cap, like Hormaz is mentioning as well.
So yes, there are negotiations on the commercials on the annual basis. It's an ongoing process.
But for now, Sun TV clarifying to exchanges after their shares were trading lower in the day.
Remember, today is an important day given the fact that there will be some flows that you will see, especially towards the later half of the session.
Good afternoon, hello and welcome to Closing Bell. We are down to the last 1 hour of today and of course of the week as well, and it's not bad. Friday started with a fair amount of caution, but I think the bulls are having their say. They're saying, thank God it's Friday. Hi, Nigel.
Well, that's right. And the encouraging part, Surbhi, is that there's a broader participation, right? You have the Nifty, the Nifty Bank, both are doing well. And the mid-cap index is keeping pace with it as well. But if you still look at it, in the last few days, we're still in that band, 25,200 on the upside. But the bulls, they'll say, we're getting into weekend and we are in party mode.
No, absolutely. And actually, I'll tell you why today's day is a fairly good one. The reason being that this band that Nigel spoke of, let's pull up the Nifty. The Nifty for the better part of this week has been absolutely flat. I mean, flat was the best case scenario, but today it's doing a lot better than that. It's now creeping back to the top side of the range. Before the market cooled off, the highest levels that we had hit were close to 25,200. Now, we're not quite there yet, but at least for today's move, the index is back above the 25,000 mark. Let's see if you get a close above that zone or not. And the second aspect is the mid-cap recovery. You've got a very solid advance decline ratio today. You've got over 1,800 stocks on the advancing side. Declining stocks are just 800. There's buying in mid-caps. Let's pull up the small cap index as well, small cap and micro cap, because this is the part of the market that was battered and bruised quite a lot this week. But Friday seems to be reversing quite a bit of that. We don't know. There's no further new international input as such. Global markets are still cautious. US futures are trading down about 0.25% right now. No further updates out of Iran. We don't know what the weekend brings. So for what it's worth, Nigel, I think people perhaps have thought that we've had a fair amount of mid-cap correction. Today, the spirits seem to be on the buying side.
In the last two trading sessions, Surbhi, what we were hearing is maybe tonight the United States enters into this battle. But I think the soundbites that came out of yesterday said that they're going to be in wait-and-watch mode for a week or 2 weeks.
2 more weeks, he'll decide.
Yeah, that's what. And, the street at least says that it's pushed back a little bit. Yeah. So the hope is that there is not going to be any attack. Rather, there's going to be some kind of dialogue over the weekend.
A deal.
And hopefully we get some kind of a deal. And we know Mr. Trump loves deals. Yeah. Sometimes when he's part or not part of it, he still says that there's a deal in the works. So I think pushing back of that, attack deadline, I think the street is taking that a little bit positively. And though volumes, they're still struggling. They're still on the lower side if you compare it with the averages that we saw, say, 10 days ago or thereabouts. But how do you position yourself in the final hour of trade? Ashish Kayal joins us with some closing strategies. Hi, Ashish. Always a pleasure having you on the show. What's your view on the Nifty? Where are we headed from here? Is this the big breakout, or do you think we're still going to run into resistance at 25,200?
Hi, Nigel. Afternoon to you and all the viewers. If you look at Nifty, I would say Nifty has been climbing the wall of worry. If you look at from the lows when the Trump tariff happened, the India-Pak war happened, Iran-Israel happened, and still Nifty is at the levels of about 25,000. So this is climbing the wall of worry. I'm optimistic. I think if you get a dip from here around 24,950, 24,980 by the market, we can expect moves towards 25,300, 25,500 on the upside. Events can result into volatility, but the trend will continue, is what it's looking like. And we are already sustaining about that 25,000 mark. So the call sellers are going to possibly start covering some of their position by the closing time. So the undertone remains positive, and we can clearly see stock specific action continuing here. Bank Nifty is also up by more than 500 points. So I think Bank Nifty can take a lead from here and might head towards 57,000. So overall, I'm optimistic on the markets.
Okay, all right, Ashish, good to know that. Let's talk about some individual stocks and maybe, throw in a specific word on some of the large cap names, because it's a good large cap day today. Reliance itself, 1.5% higher. Jio Finance is leading from the front. There's Mahindra and Mahindra. So just tell us in general, what are your trading picks for the last hour? And within the large cap universe, would you look at something, perhaps positional, something going into next week as well?
Absolutely, because the stock that you talked about, Reliance and Mahindra, both of these have been a very strong, reason why the markets are also sustaining. Reliance is one of such reasons. We can see Reliance has been consolidating since around 12th of May. It has been more than a month that Reliance has been moving in a range, and so is Nifty. So Reliance looks like breaking out on the upside. I'm expecting it to reach towards the level of 1,530 on the upside. And if that happens, the index will also move higher. On the downside, the support for Reliance is going to be today's low, which should remain intact, is around 1430 levels. And the next pick is going to be Mahindra and Mahindra. We can clearly see this auto measure has given a strong breakout. I've been talking about this stock since a week now, and it has already given a strong breakout above the previous pivot highs, which it made over the month of May as well. And I think it is going to head towards 52-week high above 3,300 levels. So overall, Mahindra and Mahindra looks good from the auto space. 3,400 is the target for the stock. On the downside, 3,100 is a very important support. And this is on the basis of a sector rotation that we are seeing as per Stowell's pyramid. It was the financials when the interest rate started coming down. They outperformed. We saw Bank Nifty outperform. Now auto is catching up. And later, I think as per the sector rotation, it will be IT. So I think auto has a lot of room to catch up on the upside.
Okay. All right. Got that, Ashish. Thank you very much for all the trading ideas there. We will come back to you in a bit. Let's now focus on banks and NBFCs, because that's been the big story over the last 24 hours, with the RBI coming through with the final norms on project financing. And like we've been telling you since morning, the final norms are not as difficult for lenders for stocks like PFC, REC, HUDCO as what was earlier feared, because the RBI's earlier draft was far more stringent, but the final norms don't look as bad for these lenders. We have Lata joining in to explain the details to us. Lata.
The draft rules on project finance were very strict. Compared to that, the actual rules which were announced yesterday, that is Thursday, are relatively easier on banks. Basically, it refers to how much you must set aside as provisioning when you give a project finance loan. Because in the past 10 years, during the infrastructure loans boom period, a lot of them went bust. Now, the RBI's move was in the draft rules that more money be set aside in good times, so that even if they go bad, you can adjust. But to come to the rules say that banks have to keep a provision of only 1% for a project finance loan. The draft rules had set 5%. At the moment, banks keep only 0.4. So it's more than now what it is now, but it is much less than what the draft rules threatened. In case the projects were delayed, they are called DCCO deferment. What is DCCO? It is date of commencement of commercial operations. If it is delayed, then you have to keep an additional 0.37% of the total loan amount as provisioning for every quarter. The draft rules had said it should be 2.5%. Compared to that, again, it is lower. Then for commercial real estate, the new rules require 1.5% of the loan to be kept as provision. Again, the draft rules were 5%. Once the project becomes operational, see, under construction, you have to keep 1%. Once they become operational, the new rules say treat them as any loan and keep only 0.4% as provision. The draft rules had said even when they go into operation, you have to keep 2.5% as provision and then slowly bring it down over 5 years. So the point is the new rules which become applicable from October 1st are far simpler. What is more important, they apply only to prospective projects, not to projects which are already given. That was another thing which was pressuring bank stocks and the NBFC stocks. NBFC stocks which will also find relief because of this are PFC, REC, IREDA. But in the case of the NBFCs, just one point to note is they already provide more than banks because they have what you call ECL norms, expected credit loss norms. So for them, the change is really not much.
Okay, all right, Lata, thanks very much for that comprehensive explanation. Well, earlier in the day, Rob Subramaniam of Nomura spoke to our colleagues on a whole host of those measures, including the RBI's new norms. Take a look at his view.
I think it follows on the back of the jumbo rate cut by the RBI of 50 basis points recently that surprised the markets as well. So it looks pretty clear that the RBI is in broad monetary easing mode. And, you know, specifically for this recent measure of easing the macro-prudential restrictions on lending for infrastructure, I think it's a very good thing. I think if you look at India's balance sheets, the corporate balance sheet is very healthy right now. Inflation is very low by Indian standards, 2.8%. And it's the time to ease policy. So a lot of people thought after that surprise 50 basis point cut, when most expected only 25, that, oh gosh, this is a big cut, the RBI is going to be done cutting rates, especially because they shifted their stance only to neutral. But our view is there's more to come. And the big reason is we feel that inflation in India is going to remain very benign. We think in the coming months it could be close to 2%. The latest reading was 2.8. And that's the bottom of the RBI's 2 to 6% target. So we have 2 more cuts this year, 25 basis point in September and December.
All right, so that's a global view coming in on Indian financials. Gurmeet Chadha of Complete Circle Investments is with us now. Gurmeet, great to have you on. Happy Friday to you. Market finally seems to be feeling Friday because we were quiet for the most part. Mid-caps were correcting, but today the flare is back. Let's start with your sort of just a quick overview on how you see things. If someone is waiting to invest, I mean, I know typically you shouldn't time, but that's exactly what investors do. Given the uncertainty around Israel-Iran, do you think the worst of it is past and you should just stick with your investments, or are you bracing for more volatility in the near future?
Thanks, Urvi. So I think if you see markets in terms of gold prices, oil prices, bond yield, I think markets are probably discounting a shorter conflict. Now, they can be right or wrong, but as far as the positioning goes and the price action goes, the market are probably expecting a early resolution to the conflict. Now, if this hypothesis gets challenged and it continues and there is more escalation, the probability is low. You will see some heightened volatility. That's point number one. Point number two, I think for an Indian investor, I think you have to think a little beyond a couple of months. So what can happen over the next 3 to 6 months will be is you can have a trade deal with US, which is one big uncertainty which markets are facing, especially sectors like IT, exports. They've been very subdued. So I think that could see a bit of a up move there. I think banks will see faster transmission of rates. RBI again has today eased out, the project finance provisioning. So the regulator is very clear, very pro-growth. Inflation is pretty benign, likely to be benign. Crop has been good. So I think that what RBI has done few days back, I think we'll talk about this as we progress and once this volatility is behind us. It's affronted what it wanted to do over the next 3 to 6 months. So that the transmission will happen. Imagine the consumption trigger when you have home loan rates at 7%, car loan rates at 7%, PL at 9-10% on quality lenders. I think that will materially change the consumption basket also. And third is the fact that we have very little, concern with all these conflicts. Every conflict in the past has been a buy on a dip opportunity. Let's say in case there is escalation. I'm sorry if I'm being a little insensitive. I think it is a buy on dips market and it will remain a buy on dip market.
Okay, all right. Hi, Gurmeet. Good to see you in this afternoon. How's the weather in Delhi? Oh, yeah, it's raining. I believe it's a little humid out there.
Much relief, Nigel. It was quite hot. Last couple of days have been better. Not so good news for AC makers, but yeah, weather is better.
All right, great. Gurmeet, I'm just looking at a clutch of stocks. If I look at Bharti Airtel, rock solid. Reliance Industries is doing quite well as well. And the street, I think there's some optimism that maybe, in fact, you can get some kind of a price increase, a tariff increase that could come about. Maybe, maybe not. What's your view and what's the preference from the telecom makers?
So, Bharti has been one of our top picks for a while now. It's been a few years. And I think if you see the revenue mix now, the mobility business, which is India and Africa, that makes up almost 80%. And then you have Airtel Business, which is the enterprise solutions they offer to SMEs, corporates. Then you have Home, which is your home services. And then you have digital services. And Payment Bank is actually very small. So ARPU is at about 245. I think it's a matter of time it gets to about closer to 300. It's inching up, but it's inching up not at the pace probably the street would have liked. And that's why you see some consolidation before the move happens. More importantly, Nigel, if you see the free cash flow generation of Bharti, last year was almost 40,000 crores. The capex has come down by 20%. Now in an environment where you have technically 2.5 players, you have less intensity on capex, more free cash flows, higher tariff, the stocks will probably get more re-rated. So at about 8 times, 9 times EV by EBITDA, you could possibly see, maybe going up to 10, 11, because this is one sector where there is not much surprises in earnings. Even during COVID, telecom was one sector where there was not much cyclicality there. And in a market like this, where you are reasonably assured of earnings and free cash flows, less capex, I think it makes it ideal. So I see more legs in Bharti and we are invested in it for the long haul.
Okay. There's such a flurry in the mid-cap market. Gurmeet, just hang on 1 second. I'll quickly spot some stocks and then we'll go back and talk about this. Premier Energies and Waaree, both of them, between 5 to 9% higher. It's a totally different market. Yesterday, you had mid-cap sulking. The index was down 2%. Small caps were down. Everything was down. Today, the entire sentiment is different. Look at Mishra Dhatu, 8%, 7% actually. Something like Technocraft is up 8.5%. Go Digit 6%. BEML, which is obviously seen as a big sort of quasi-defense infrastructure sort of a play, it's up about 8.5% as well. Big move. Nava as well, actually, since I spotted Go Digit, even Nava from the insurance pack, up 5-6%. Really, really strong day. Strong afternoon, at least, for a lot of these mid-caps. Gurmeet, I don't know if you've heard anything new on Waaree or Premier, or I don't know, maybe it's just overall mid-cap enthusiasm. Any of the names that I was spotting right now, any interest?
So we are right up there in the value chain, but we prefer stocks which are slightly out of favor and give you valuation comfort. So we have a Tata Power, hasn't done much, but trades at about 25 times forward. You should see some restructuring at some point of time between the renewable business and non-renewable, as well as the distribution. And so it's a completely integrated company in generation distribution. And then they are in solar panels and EV charging as well. And stock hasn't done much. So there's reason. I think Power Grid, to me, surprises me with very subdued. 14-15 times earning, great dividend yield. And transmission capex could be 6-7 lakh crores over the next 3-4 years. Has more than 60% market share. Government holding is around 51%, so not much supply pressure either. And then we have some, cable and wires names, transformer names. We have CG Power also, not purely power, but power plus semiconductor play. So we have up the value chain. We are more focused on power equipment and transmission right now than on generation. And I think energy, along with manufacturing, I think is a very secular theme. So you've got to be a little patient. I think the risk reward is extremely favorable.
All right, great, Gurmeet. Stay with us. There are some Sensex adjustments, rebalancing, as well as FTSE All-World Index adjustments that will take place today. Vivek joins us to help us refresh all of those details. Vivek.
Well, that's right. So Sensex will wear a new look come Monday. FTSE, will see some adjustments, as well as one stock that will get deleted from the MSCI. So come Monday, Sensex will have 2 new entrants, which is Trent as well as Bharat Electronics, and they come in at the expense of Nestle as well as IndusInd Bank. Trent as well as Bharat Electronics during the course of the day today would have received a little over $300 million each of inflows. This on account of the adjustment that is taking place, and also Nestle as well as IndusInd Bank are seeing outflows. Nestle of over $220 million and IndusInd Bank of over $130 million. As far as FTSE is concerned, remember in this particular rejig, it is mainly the newer entrants, the newer IPOs that are making the way into the FTSE All-World and All-Cap Index. Within the All-World Index, Hyundai Motors, NTPC Green, Vishal Megawatt, Waaree Energy as well as Swiggy are making their way into the FTSE All World Index, while OneSource Specialty, Sai Life Sciences and Afcon Zinc are making their way into the FTSE All Cap Index. No deletion, so it's a net inflow event as far as FTSE is concerned this time around. And lastly, keep an eye out for Siemens Energy, especially in the last hour as we speak. Volumes could be quite high. This on account of the fact that the demerged entity that got listed yesterday will get deleted from the MSCI Global Standard Index. IIFL Capital estimates outflows of around $150 million over here.
Okay. All right. Got that, Vivek. Thanks very much for that list. Those are the stocks that are on the move. Gurmeet, just before you came in, we were discussing the new RBI norms, project financing. You know, the good news from the Reserve Bank keeps coming. And as you said, it'll really start showing up when you have cheap home loans, car loans, etc. So how would you play this new reality of cheaper money in India, ample liquidity? What kind of lenders, or should it be through other facets like, I don't know, consumer durable stocks or real estate plays? How to play the new reality with respect to monetary policy?
Yeah. So I think I would still prefer banks over NBFCs. Reason being, banks, the earning growth is catching up, not with as much as the price action. And if you see, for example, post RBI policy, hardly any price action in the likes of, let's say, an ICICI, HDFC, SBI, etc. Also, they're sitting on good treasury gains with the way 10-year is now 6.30. I think in 6 months, 12 months, you will see 10-year at sub 6. So I think both net interest income, treasury income, and fee income, banks will see all cylinders firing. And I think consumption will pick up. One NBFC space we like is gold-based lending now, because that's where probably the rise in gold prices, the delinquencies come down. And I think that could be a proxy play to consumption also. So something like a Muthoot maybe. So I think that's the right way to play it. And I think urban consumption is making a bit of a comeback. So you can see that little bit visible in likes of hotel stocks, Trent, it's a bit of a comeback by, quick commerce players like Eternal or Swiggy, etc. So I think the consumption basket is completely right now under-owned, hasn't done well. Look at the Tata Consumer, look at most stocks in this space. I think that can make a bit of a comeback, and obviously two-wheelers. So two-wheelers and four-wheelers. So I think the subdued part of consumption, more discretionary, less maybe, non-discretionary, can make a bit of a comeback.
Speaking of financials, Gurmeet, just taking a chance here in case you had a look at HDB Financial. I mean, I'm not asking for a specific subscribe or not subscribe, but just, any general sense of the business and valuations now that we know the price band.
No, I'm happy.
One more thing, Gurmeet, one more thing. This unlisted market, some of these frontline names as well, some of that bidding is getting a little bit excessive over there. For example, I think maybe the people who bought in the unlisted market, even this one, bought it at a higher price. And the likelihood now is that, they'll be burning their fingers. Similar is the case with a couple of other names as well. So if you could, answer the question, Surpi, and also give out a message about how you're approaching this. Because, the last thing you want is retail audience to get hurt.
Yeah. 200%, Nigel. And I think we had that discussion. I think HDB, I'm happy HDB, they have priced it well. I know, because what we've seen in the past that, NBFCs are priced at 4 or 5 times book, and everybody starts drawing parallels with Bajaj Finance. We saw that parallels being drawn with a lot of other NBFCs also, which were failing, and we saw what happened a couple of years back. So I still believe that this competitive pricing, it may still list it a little better, but this is a lesson for all retail investors. There's absolute FOMO in unlisted space, because there's no price. The price is decided by few brokers, large brokers, and in terms of demand, supply, availability, and a lot of times the volume is thin. Even in some of the capital marketplace, you have suddenly started giving 60, 70, 80 multiples. And mind you, these are very cyclical businesses. While long-term story is great, I think whether it is NSE or depository or everyone, I think the long-term story is great. But you can have, let's say, 2 soft quarters. The earnings can drop 20, 30%. We saw that with CDSL last quarter. So it is not same as banks, right? And you have to be mindful of paying valuations. Right now, I think the retail especially needs to do a lot of homework in terms of, doing this unlisted space. I think there's a lot of FOMO, especially with respect to capital marketplace.
And an HDB? Any specific take?
Sorry?
On HDB Financial, any specific take, advice, general sense on the business?
I think it's a good business. So we're happy that, as I said, it's been at around 700-800, even in unlisted market for last couple of years. only last 3 months, because the broader movement happened and most unlisted stock shop. So they had some issues during COVID on NPAs. I think they've worked back. They slowed down on a lot of lending they were doing, especially the high risk lending. I think the book is looking much better, and the parentage is HDFC. So eventually on asset quality, you will not see many shocks. So this is one which would be a very steady compounder in my view, and at this price band, it looks good to me, to be honest.
Okay, all right. Thanks very much, Gurmeet. Great conversation as always. We'll leave you to kickstart or what should be hopefully a great weekend for you. And we look forward to the next conversation soon. Have to take a break right now. But actually, we'll leave you with a slice of the conversation that our colleague Ritu had with G. Ramesh, Managing Director and Chief Executive Officer of HDB Financial Services. Of course, she quizzed him on their business plans, need for capital, and growth prospects going forward. Take a look. We'll take that break and come right back.
So we have an independent origination engine, an independent risk management engine. Our technology platform is independent. We have more than 1,700 branches across the country. These are independent branches. They're not part of a HDFC Bank branch. These are independent branches. And so we have an engine that's independent of our promoter. We have a lot of guidance from them, in terms of corporate governance, or whether it's risk management, or whether it is, how do we manage a business through cycles. But at operating level, we are an independent business. Since we are doing an IPO, we felt that it's also important to look at the next few years and make sure that we don't come into the capital markets a few months or years after doing an IPO. So we felt that this is the right time to raise capital. We expect it to last to about 3-4 years. Having said that, if the Indian economy has a huge flip up, I'm sure the investors will be kind to give us more money. Had a huge track record as a company of being a profitable growth company, right? So we will have events, macroeconomic events or microeconomic events that require us to adjust our portfolio and adjust our growth rates. That's something we are comfortable with as a company. We believe that we have to manage growth with profitability.
Welcome back. Well, the markets continue to hold with gains of close to around 250 points. Trent is the one that's bucking the trend now. It was quiet for majority of the trading session. That's moved to the high point of the day. Bajaj Finance, those bonus shares, they got credited. Some of that got sold in the last two sessions. Today, it's finding its feet. So that as well is good news on that particular front. From the broader markets, we have, those markets that are keeping in step out there. A stock we don't talk about too often. Ratan India Enterprises up close to around 8%. Ratan India as well up close to around 10%. So just spotting it because of the kind of volumes. But otherwise, big move is what we're seeing on a couple of these names. Well, Jitendra Goel, Kotak Alternate Managers, joins us on the show. Hi, Jitendra. Good to see you in. What's your view? How are you feeling about the markets? You're getting a bullish case that's playing out, which suggests that maybe, in fact, you could even get a double-digit return on the Nifty from here. While, you have another part of the market that says, well, there's too much of bad news that's coming in there on the geopolitical front, on what Trump has to say, and also valuations are not supportive. What is your comment?
Hey, hi, Nigel. A couple of things. See, we are in midst of this geopolitical crisis. But on the other hand, if I see the policymakers, they are loosening their policies, right? So right from your monetary to fiscal side, all the developed markets, despite their inflation is much higher than 2% targets. We have seen that the monetary policy generally is on the easing side. Also on the fiscal side, we are seeing right from Germany to US, everywhere in the developed markets, fiscal easing is on card. So net, one side, we are concerned about geopolitical stress, but on the other side, the policymakers and central banks are loosening their policies. And this is actually leading to some kind of support for the global markets. On the other hand, if I look at India, that's the other way story, right? So last 1 year, if I see, India has been consolidating. MSCI India hasn't delivered to the extent what other markets have delivered. And we have underperformed because last few years, we have been showing a very, very resilient and a very strong performance. So after this consolidation, we feel that the earnings season is going to look a little better than what we saw in last year. So we expect that earning acceleration is on card. And if I look at the macro perspective, also the GDP numbers for India, probably we might see some kind of surprise in coming quarters. The kind of stimulus the RBI has given with repo rate cuts and interest rate cuts. So net, our inflation is undershooting while our growth is outpacing the expectations. And hence, we think we are in a sweet spot. We think market is in a buy on dip as a lot of support coming from fiscal as well as monetary side globally. And from India perspective, also, the government has started to pick capex. And if you see the private side as well, the balance sheets are significantly strong. ROEs are one of the best in the world, and net debt to EBITDA is falling below 1 time. So I think private sector is also now going to see some kind of spending, boom. So I think we are in a very good spot. Barring valuations, where I feel that it's very widely covered that India's valuation is expensive. But at the time when our inflation is undershooting and growth is outpacing, valuation will remain elevated in our view.
All right, that's an important point, Jitendra. I just wanted to ask you about the point you made on the BSE 500 ROEs. How much have they improved in the last few years? And I think they're the second best after the US market. Is that correct?
Yes, you are right. So if I look at the global, probably top 10 economies in the world, I think after US, India is the best ROE somewhere around 15 odd percent. And the third best would be Europe, which is around 11 odd percent. So India offers such a attractive ROEs. If I look at BSE 500, secondly, the corporates are flushed with cash, right? And at the time when your 10-year yield is heading towards 6% or even below in the next 12 months, I think we will see good capex spree coming in from private sector. You look at any industry, right from your consumer sectors or cola, for example, footwears, innerwear, defense, transmission, power. You see all these companies, private sector is now coming out and started to spend. Right. So I think ROEs are very attractive, and not even ROEs. If I look at even the consumption margins, right from your FMCG companies in the last 10 years, their margins have also gone higher by around 400 basis points to even as high as 800 basis points. So margins are high, ROEs are very attractive, cost of funds are falling, and cash is amply available. So I think we are going to see a very good investment cycle also going ahead. The question is demand, right? So demand is also a function of how much government is going to spend. So 10 years government has been continuously spending on infrastructure. And now I feel that industry, I think we will see some acceleration in growth going forward.
Jitendra, hi. So you're sounding fairly optimistic. And if one were to then reflect that in the portfolio and create a portfolio accordingly, then give us, say, your top 2 or 3 sectoral calls, or basically 2, 3 areas or themes that you would be most bullish on. Jitendra?
Yeah, I can hear you.
Yeah, I was asking you for your top 2, 3 sort of thematic calls that you'll go with from a portfolio perspective, given the optimism, given the reasoning that you just shared.
Surabhi, yes, it's very clear that the past winners are not going to be future winners. India is now changing, the complete trajectory. Once we move from 4 trillion to 7 trillion, the sectors which are going to drive this transformation are going to be very different. So first, I feel that in the very near term, I think India's interest rates are going to be much lower going forward. Plus, the hedging cost is also coming down. So net-net, I feel that interest rate sensitive stocks are near-term bets, and we have been betting on this for the past few years. So NBFCs and real estate probably is a structural kind of an upcycle. We will see that the cycle is going to continue. So that is one. Second, we think electronic, EMS players, manufacturing sector. I think there we are seeing very good traction happening, and some stock, sectors. And this particular sector is showing even margin expansion and improvement. So I think these are the 2 major sectors that we feel that are structurally very well positioned. Power transmission development, I think that's well researched and well talked about sector. But here we are not finding very good value play. But once the dip happens, probably T&D space is also looking fantastic from investment perspective. So I think these are the sectors that are looking pretty attractive in our view. Hotels, travel, tourism, these are all that we have discussed last time as well. So net-net, I feel one thing that people can even look at is the consumption side, right? So today that's completely avoided sector. People don't like to talk more about consumption. But if I look at last few years, the certain sectors such as airlines or hotels have done better, and FMCG sector has been a laggard. But going forward, I think next 12 to 18 months, we believe that the low-cost housing sector may start to deliver. So the sectors or NBFC sectors, which is linked to low-cost housing, I think they will perform. Secondly, I think next year, second half, we have to position for 8th pay commission beneficiaries. Now, remember, 1.1 crore people are going to see salary hike, including pensioners who are working in central government jobs. So still 12 to 18 months away, but market is not going to wait for that. So slowly, gradually, you should lap up some of the consumer discretionary companies if you have a 3-year view starting from second half of this year. So I think the Diwali is going to come in, interest rates are falling. Some consumer discretionary companies are also a very good bet from a 3-year perspective.
Thank you, Jitendra, for joining in and giving us your view on the markets. As you said, still there are select sectors and themes that will do well in this market. Maybe the headline index appears to be valuation-wise expensive, but ROEs in the broader markets are improving, the balance sheets are in far better shape, and you believe that we'll get that early teens growth in terms of earnings on Nifty, and broader markets could outpace that as well. Thanks a lot for joining in. Wishing you a good Friday evening, Jitendra, and a rocking weekend ahead as well. Well, for the time being, we'll slip into a short break, come back, we'll get you technical picks with the news that the markets are at the high point of the day. Bazooka move actually on the Nifty going into the weekend, at the high point of the day, the volumes as well have picked up, and that's encouraging. This move is coming on good volumes now. You can see a massive pickup in volumes, and that's very, very encouraging. In fact, in the broader markets as well, quite a few stocks are moving around. Vishal, Megamart, that's moved to the high point of the day. Z Entertainment as well has seen a bit of a spike up. Swiggy, swigging it away. That stock is up close to around 4%. You should pull up some of these names. All of them spiking up. Even a big underperformer like Tejas Networks. Take a look at the intraday chart out there. That's a rank underperformer. Seeing some buying interest from the day's low. Sharp uptick is what you're seeing on Tejas Networks as well. Just all of this in the last few minutes. Ashish Kayal joins us to help us out with a quick technical check. Ashish, I wanted to review if you have any on Tejas Networks, first of all. That's been a big underperformer. I think it went down to that 670 odd ballpark. It's seen, more than 1,000 rupees as well. How is it looking on the charts?
If you look at it at the charts in last 10 minutes, I think it just spiked up from 687 to 702 odd levels and currently at around 700. I think it needs to close above that 700 levels to sustain higher volumes are picking up here, and then the stock can move towards a level of around 740. One can maintain a strict stop loss of around 680. The risk reward looks good, 1:2. So 740 is the target, 680 is the stop loss. Volumes are picking up, so I think the stock can move up.
Okay, you think the stock can move up even from your big spike out there. But Ashish, I just thought I'll ask you about that one because it spiked up. Quick check on the Nifty. Is this the big breakout? 300 points higher out of nowhere. I'm hoping our boys do well as well in that test match that starts against England, against all odds. But besides that, we'll wait by for the test match. But on the Nifty, where are we headed from here on? And give us your fresh picks as well.
Yeah, I think Nifty is already hitting sixes despite of all the events. And I just now talked about that we might be headed higher from here on towards 25,300, 25,500. And post that about just 30 minutes before when I talked about Nifty has already spiked up by another 100 points. Do not try to catch a top here. I think we are moving up. We are climbing the wall of worry. Events are not driving the market. It's moving on its own mode and it's now heading higher. If there is any kind of weekend risk, that can be there. But if you look at the overall open interest data, also the call sellers are started panicking. They have started covering their positions. And I think Nifty is headed towards 25,300, 25,500 from here on. Any dip from here use as a buying opportunity.
Okay, brilliant. Okay, all right. And that's the important point you made. The call writers got very, very confident and they seem to be getting stumped out, quick stumping there in terms of those call writers. But what about individual stocks?
From individual stocks, I picked up something from the mid-cap space. We already talked about M&M and the other stock, Reliance from the large cap. From the mid-cap space, I think mid-cap and the large cap is SBI Life. It is just trying to break out above from here on. So SBI Life can be a good catch here. One can maintain a stop loss of 1760, expecting a target of 1920 on the upside. And the another stock is MCX. MCX is not stopping anywhere. We can clearly see with the bullions going up, a lot of interest into the trading activity of gold and silver has kicked in. And MCX volumes are also picking up as a stock. And we can think the stock is headed towards 8,500 on the upside. Maintain a stop loss of 7,500 on the downside for MCX.
Okay. All right, Ashish. Thanks very much for all of those trading strategies. You have a good weekend and we'll connect again soon. With that, let's move on. We're down to sort of 2/3 of the month is pretty much over and we're looking at the auto sector now and perhaps what the sales numbers for June could look like. We've got some data out of Vahan and our colleague Sudarshan is now joining in to tell us what the highlights are. It seems that there is a growth of about 6% led by two-wheelers. But let's go across to Sud for more details. Sud, what are you picking up?
So in the month of June so far, the indication is that we are most probably likely to see the growth above 6% because in the first 3 weeks of June, total vehicle registrations so far have increased by 6%. And after so many months, several months of underperformance in the month of June, we are seeing a healthy growth trend. And this healthy growth is being led by two-wheelers, which is seeing a growth of almost 8%, followed by 4% growth by both CVs and three-wheelers. Once segment that is underperforming is the passenger vehicle, where registration is seeing a decline of 1% so far. Now, talking to the company-wise, in two-wheeler space, two companies that have been outperforming are TVS Motor and Eicher Motors. So far, Eicher Motor has seen a sales of almost 70% of what it has done in June of 2024, almost the same level it's for TVS Motor. As far as Bajaj Auto and Hero Motor are concerned, both have seen a total sales of 60% of what they have done in June of 2024. In the passenger vehicle space, M&M Auto continues to outperform Maruti, and in commercial vehicle space, Ashok Leyland is doing well, and as far as Tata Motors is concerned, it continues to underperform. So in the first 3 weeks of June, registration data is looking healthy, so we'll have to see how the last 1 week pans out.
Got that. Thanks a lot for that, Sid. So we'll keep an eye out on that one. But Dream, folks, that stock, in fact, was under pressure earlier today. We got a clarification actually coming in from the management after news reports suggested that several banks and card networks are planning to shift away from the company amid the service disruptions. Earlier today, we spoke to the chairman and MD of Dream Folk Services on this, and she gave out some clarification. Let's hear her out.
I think all the clients are still with us. And the reason is because it's been a long-standing relationship. What we have with all the banks, they all understand that what is the value we bring to them. And second, most importantly, is that we are deeply integrated with all our clients, all our banking clients. So all our contracts are in place, and all the programs are ongoing. So there is no such thing going on right now. And this is the business as usual, So it's a common thing in a business where, your contracts are under renewal. There will be RFPs coming in. The negotiations are on. So it's ongoing, and it's a business thing. So there is nothing change in the business structure.
All right, so that was a clarification from Dream Folk coming in. They don't see a disruption or a threat to their business because for the airport operators looking at perhaps getting into services like lounges, etc. as well. Well, with that, let's get you a snippet from the latest episode of Market Cafe. This week I sat down with seasoned investor Pankaj Tibrewal, someone who is seen as a big celebrated fund manager in India when it comes to mid-caps. So I asked Pankaj exactly that question, that the narrative in the market is that large caps seem to be a much better place to be in, going by safety and valuations, and the argument that mid caps are perhaps still overvalued. Pankaj doesn't quite agree, and he explains why in this conversation. 7 out of 10 guests that I speak to, they still say that no, large caps offer better comfort, and there's still some overvaluation in SMIDs, as they're called.
So 3 points I would like to draw. And we mentioned in our quarterly newsletter, which I published in April, that on the headline basis, when you look at valuations, we acknowledge what people are saying, that mids and small caps are expensive to their history and versus large cap. So there's a relative margin of safety there. But I think devil lies in the details. So if you go a little deeper, what you find out that earnings growth in mid-caps especially has been faster in the last 5 years. Even in FY25, which was a slow year, mid-caps earnings grew at more than 18-20%. And going forward also, our expectation is that mid-caps and small caps can offer better earnings growth than large caps. That's the one part. The second part important is the composition of the profit pool. So if I look at the top 100 companies, 52% of the profit is coming from PSU banks, private banks, oil and gas, and PSU sector, which are generally low P in nature. And that representation in mid and small cap is to that 15, 16%, 17%. So generally, when you look at X of these sectors, Nifty is trading at a premium to mid and small caps. So when you do a apple to apple comparison, and the third part is, when do they trade at a huge discount? Take 2018-19. You came from a huge bull run in 2017, and then you started seeing solvency issues, right? You had Yes Bank, DHFL, all kinds of skeletons were coming out, and there was a scare of solvency. This time in now last 5 years, the debt to equity and the leverage position of small and mid caps are far, far better in many cases compared to large caps also. And the last point which I want to drive, Surbhi, is that mid and small ab utne chotu companies nahi bache. Now the definition is up to 33,000 crore market cap is a small cap. up from 33 to 1 lakh crore is a mid cap. So and they are sectoral leaders. You take tires, you take hotels, you take airlines, you take so many sectors like infra, capital goods, auto ancillaries. All these companies are classified as mid and small, but they are sectoral leaders in the sector they operate in. So I'm saying that the cycle and the texture of the market has changed.
Okay.
There are pockets of bubbles. I am completely acknowledging that. But it should not be painted with the same brush that everything is expensive and everything just sell and move away. I think in this market where 5,000 listed stocks, take out the top 100 stocks, you will find at least 40, 45 stocks at any point of time, which will give you that kind of a value to ride on. So I believe that you have to be a stock picker, as you rightly mentioned, and there are opportunities in the market which will make you money over a 2-3 year period.
This is very interesting because you're the second person that I've spoken to, I think, in the last 2-3 weeks, who has actually said that Indian stocks are not necessarily over expensive. I remember meeting Rhythm Desai at the Morgan Stanley conference, and he actually went on to say that Indian stocks are cheap. And I was like, wow, that's
I won't agree to cheap, but yeah, I mean, you have to search your pockets. And I think ये मेहनत करने का time है. For you have to go at the ground level, search for companies, search for good promoters. And coming to your second point on what to do, I think over a period, what I have learned is that process of elimination is far powerful than process of selection.
On that, let me ask you, because you just said that there are still maybe some pockets where, things are a little overheated in the small and mid-cap space. So can we sort of rule them out? I mean, do you see, I don't know whether it's maybe defense or are there certain thematic areas where you do see excesses? Which ones would those be?
So, for example, one of my yardsticks is, for example, cash flows. So look at few of the EMS companies trading in India, right? Narrative is very strong.
90 times P, 100 times P.
110 times P. But when you open their cash flow statement, not all I am saying, but many of them who are trading between 25, 35, 40,000 crore market caps, the cumulative cash flow over the last 5 years, operating cash flow, is not even more than 50, 100 crores, right? That means it's a thin margin businesses, but they are hugely deploying money in working capital to drive growth. So I think that's something we need to be, I'm giving as an example.
Something to be cautious about.
That narratives will work for a while. But finally, top line is vanity, bottom line is sanity, and cash in bank is reality.
Is the reality.
So cash flows you can't ignore at the end of the day. Yes, for 1 year, 2 year, there could be aberrations on cash flow either sides, but over a cumulative 4-5 year period, cash flow is something we need to be taking cognizance of.
Welcome back. I think that rebalance is taking place. BEL has moved to the high point of the day. So I think we should get the intraday chart on that one. Nice sharp spike is what you're seeing on BEL. Amrish Palika is joining us on the show. Hi, Amrish. Before we get to any of these other stocks, I wanted to ask you about the stock I asked you yesterday, Dreamfolks. There was some uncertainty with regard to a couple of contracts. The management has come on the channel. They've given a clarification. Right. But from the days again, the stock has come off. What's your view on it?
Yeah, I think the MD has stuck her neck out and confirmed that nobody's moving out. But I think still the market is not buying that statement. So if she's proven right in the next couple of months and the earnings are supportive, then I think we can see a very decent upside. But for whatever reasons, the fears of Axis, ICICI, MasterCard moving out, in fact, comes true, I think it'll be difficult for the management to give any further clarification going ahead. I mean, I'm just giving an example of EasyTrip. I mean, whatever clarifications they come out with, I mean, how many people believe it? I think that's going to be an issue going ahead.
Okay, that's Dreamfolks. All right, so not too convinced, got that point. Amrish, what's the pick for the day?
It's Gland Pharma. So it's one of the largest and fastest growing injectables manufacturing company. Global footprint is in about 60 countries. Large range. It's across sterile injectables, oncology injectables, as well as ophthalmic. Q4 numbers were a tad bit lower than expected, but the management commentary was positive. And that's one of the reasons why we have seen a positive trend post the earnings. They launched about 31 new products in US in FY25. And their cartridge capacity, they are increasing from 40 million to 140 million units per year. This should happen next year. Net cash position about 2,300 crores, which is about 8 to 9% of market cap. GLP-1 and biologics would be the growth drivers going ahead. And already they have a strategic tie-up with Dr. Reddy's. And US pipeline also has been decently good. Zenzi, which was acquired in 2022, was in fact pulling down their overall performance earlier. But if you see the last couple of quarters, it's been performing well. And Q4, if you look at the gross margins of this vertical, it was about 79%, which is quite positive. So expected the consolidated EPS is about 72 for FY27. And with this, my target price is about 2,350.
Okay, so Gland Pharma is the key pick. Any word on some of these insurers? Go Digit, they're having a good session. I mean, in insurance, would you like anything?
Yeah, insurance. In fact, I mean, I would surely go in with HDFC Life at this point of time because I mean that was a slow mover earlier. Now just gathered that steam. And looking at the monsoon session, having the insurance bill, I think should be positive for most of the insurers. So among them, HDFC Life.
Okay. All right, Amrish, we'll wrap it up on that note. Thanks very much. We'll leave you to enjoy the rest of your weekend and we'll connect again soon. Well, it's been a fabulous Friday for the market. That's the only way of looking at it because you've got a 300-point rally on the board. And we've outperformed most global markets, thanks to the fact that no further negative news, at least none while we were trading. It got the bulls back out in full strength on the street. Big move on the Nifty. In fact, if you talk about it sectorally, the Bank Nifty has also done very well. It's outperformed, almost outperformed the Nifty. Gain of 1.2% there as well. And mid-caps have come back with a flourish. The mid-cap index is up almost 1.4%. It has cut its weekly loss to just about 0.5% now, because till yesterday the mid-cap index was sulking. It was down almost 2%, but looking very, very good as far as today's action is concerned.